ለመማር ወደ ትምህርት ተቋም መሄድ ግድ አይደለም።
ናሽናል አቪዬሽን ኮሌጅ
ራሳችሁን ከኮሮና ቫይረስ ወረርሽኝ እየጠበቃችሁ በቤታችሁ ወይም በተመቻችሁ ቦታ
በኢንተርኔት አማካኝነት በኦንላይን ትምህርታችሁን መከታተል ይቻላል።
ካናዳ ከሚገኘው ኢንተርናሽናል ኤር ትራንስፖርት አሶሲዬሽን አያታና
ከእንግሊዙ ኢንስቲትዩት ኦፍ ኮመርሻል ማኔጅመንት ICM ጋር በመተባበር የሚሰጡ ትምህርቶችን ተከታትላችሁ በ6 ወር ጊዜ በዓለም አቀፍ ደረጃ ተቀባይነት ያለውን የስልጠና ማስረጃ ባለቤት መሆን ይቻላል።
ከኢትዮጵያ ሲቪል አቪዬሽን ባለስልጣን ሙሉ ዕውቅና ባገኘንባቸው የፍላይት ኦፕሬሽን እና የሆስተስ ስልጠናም በምዝገባ ላይ ነን።
ጥያቄና መልስ፣ የክፍል ስራዎች ብሎም ፈተና መፈተን ክፍል ውስጥ እንዳላችሁ አይነት
ልምድ ባላቸው መምህራን እየተማራችሁ
በኦንላይን ባላችሁበት ቦታ።
አድራሻ ከ22 ማዞሪያ ወደ ሾላ ገበያ በሚወስደው መንገድ 150 ሜትር ገባ ብሎ ናሽናል አቪዬሽን ኮሌጅ
የናሽናል ኤርዌይስ እህት ኩባንያ
ህልሞን እውን ያደርጋል።
Dear students, today we are going to see the second section of Chapter 2, and in today's session you are expected to clearly understand two major concepts. One is you are expected to understand the type of the financial markets and their respective characteristics. The second point is about how the banking system functions. Under this component, we are going to see the assets and the liability component of the banks, meaning the commercial bank and the national bank, and in some countries they call it the central bank. And the first topic starts with defining the financial markets. What are the financial markets? And what are the purpose or the functions of financial markets? Financial markets are markets where financial assets or securities are traded. As of the commodities, we have financial markets, and these financial markets, you have their demand and supply side, and these financial assets or securities trading point is referred as financial markets. And what are the functions or the purposes of these financial markets? One is financial markets can enable to transfer funds or securities from savers to spenders. Consider what will happen if there is no financial market or financial institutions in general. Therefore, that gap will be filled by the financial markets, which are being run by the financial institutions. The other point is the financial markets can enable to grant liquidity to financial assets. Here you see financial assets, right? Or securities. Tashama is raising your hand. Is this not? Can't you hear me? Yeah, Yari Tashama. has a problem in the sound, you can send me a message in the chat. يعني يا ريت تشرح يا ريت. Okay. The third is the financial markets can enable to facilitate investment by easily accessing funds. Those investors can enable to get funds through the financial markets. Therefore, financial markets are very important out of the currency markets. And there are different structures of financial markets. And you can go through the monetary economics book. For the sake of this presentation, I have brought you some basic categorization of the financial markets and their respective characteristics or features. Hence, the first is the debt and equity markets. Be sure that all these financial markets might not be functional in Ethiopia. What we're looking now is the general literature. The case of Ethiopia will be discussed at the last chapter, as the sixth chapter. However, you would have to understand. So, therefore, the first is the debit and the equity market. I hope it is fixed, right? Business firms. You see here firms as well as individuals have different modality of raising funds through the financial markets. And we can classify as debit instruments or issuing of stocks or equities. Now let's see each. The debit market. Debit market is a financial market by itself, and it is a market where the instruments, that is the debit instruments, are traded. And business firms has a chance of raising their fund by selling debit instruments to the debit market. And what are the common debit instruments? Debit instruments might be bonds or mortgage. You can list a number of debit instruments. And these debit instruments will have a possibility of putting a contractual agreement with the borrowers, where the borrowers agree to pay the principal as well as the interest that is defined at the maturity date. That maturity date is a very specific date, which is defined by the borrowers as well as the lenders. And the maturity date usually is the time or the term that the instrument will expire. For instance, the Ethiopian government raises money by selling bonds, right? And that bond has a specific expiration date, usually 5 years, right? Therefore, at the 5th year, you will claim the principal as well as the interest rate. Therefore, the maturity of a debit instrument is the time at which the debit instrument has defined the expiration date. And we can classify this debit instrument as short term, long term, or medium term, depending on the maturity date. For instance, if it is less than a year, if the debit instrument is going to mature within a year, then it is referred as short term. And if it falls between a year to say 10 years, then it is considered as an intermediate or medium term. And if it goes beyond 10 years, you can consider it as long term. Therefore, the depends on the time of maturity. The second is the equity market. If there is any problem, you can still send me a message, okay? But the first second is the equity market. These equity markets are markets for equities. For instance, for stocks. Therefore, equity market is a market where stocks are sold and purchased. And the important point under equity is this transaction as a financial instrument is backed by real assets, or these equities have claims on business assets, and those can claim to have a share in the net income. And these equity markets can enable to transfer ownership from the seller to the holder. The holder is the buyer of the financial asset. And your ownership depends on the ownership, or claim to your income depends on the value of the stock that you hold. And the essential feature of these equity markets is they usually make periodic payments, meaning dividends or shares, to their shareholders or holders. And these equity markets falls under the category of the long-term securities. Why? Because the equity markets have no much liquidity. Now let's compare the equity and that of the debit market. Do you want to have or do you want to participate in the equity or in the debit instrument? There are common disadvantages of holding equity. One is in the equity market, the return is variable. It varies with the level of, it varies with the profit of the issuing company. And the equity holders are residual claimants. What does it mean here? Residual is that company might have a debit. Therefore, if you are holding an equity, you will have a share of the loss of the company. Therefore, your gain or your dividend depends upon the debit of the company itself. And the share, the dividend will be held after settling or debits. As a result, the participation in the equity market has a possibility of having fluctuation, as the equity holders are mandatorily sharing the loss or the gain of the company itself. What if the participation is in the debit instruments? However, these debit instruments have advantage over the equity, as they will be paid priorly over the equity holders. And these debit holders will not share loss from the company. However, the debit holders have disadvantages as well. The company might have large amount of profit. At that time, if you have a debit holder, since it is predefined, you will not have a proportional increase in benefit. Therefore, being a participant and being a holder of the debit market, debit holder can't make you benefited from the rise of profitability of the corporation or the company, because the return on debit instrument is fixed from the very beginning, because you have a very defined agreement with a specified principal, with a specified interest, with a given therefore we have seen the advantages and disadvantages of holding the debit and that of the equity markets. And investors usually, the government as well, makes a comparative analysis while it provides or involves in these financial markets. And here you can compare the equity market and the debit market. Which one do you think is more risky? Which one, if, for instance, if there is a risk averse person, in which market will he involve? If if you remember in the previous session, individuals might be risk neutral, risk lover, and or risk averse. Here, debit instruments are less risky. For instance, when you purchase a bond, you are sure that the amount of the principal and the interest will be paid back to you after a specific maturity time, usually for 5 years. However, in market, the equity market, it is more riskier than the debit instruments. This is because there might be a loss or a loss which you are going to share. However, if you are owning a debit instrument, whether the company or the government gets profit or not, it is mandatory to be paid for you. ብዙ ትርፍም ቢገኝ ዴቢት ኢንስትሩመንት ላይ ኢንጌጅ ካደረጋችሁ ብዙ ትርፍም ቢመጣ አይመለከታችሁም፣ ኪሳራም ቢሆን አይመለከታችሁም። በቃ ዲፋይንድ የተደረገ ለምሳሌ 1000 ብር ቦንድ ከገዛ በ5 አመት ውስጥ ይሄን ያክል ፕሮፊት ይኖረዋል ማለት ኢንትረስት ይሄን ያህል ፕሪንሲፓል 1000 you will be paid that. However, in the equity instruments, that's not the case. Therefore, those risk lover persons might be involved in equity markets. Ceteris paribus. Okay. Now let's move to the banking system. How do the banks operate? How do they operate for smoothing the economy or in general the financial system in general? The banking system is very important for smoothly running the economy, efficiently running the economy. And from these financial institutions, banks are the principal one. And banks usually supply large amount of money in the form of loan, for instance, or credit. Banks provide us loans to make our business. They help us to finance for purchasing cars, for instance. And these banks as well provide us services such as saving, for instance. And it has its own role in smoothing the functioning of the economy. And principally, banks are operating for profit motive, right? The question is, how did they make a loan? And how did they acquire or get funds? And what are their assets and liabilities? And how do they make profits? We will see now. First, let's see since we are talking about the banking system, it is important to know their respective component of assets and liabilities. Commercial banks. Who are the commercial banks? I think totally, including the government, there are around, if I am not mistaken, 19 or something banks in Ethiopia. They are classified as commercial banks. For instance, commercial bank itself, Dashan Bank, Hebret Bank, Abyssinia, Wogagen, mm, Oromia. You can mention all banks that you know. They are aggregatively named as commercial banks. They are called commercial banks. And these commercial banks have the assets and liability components. Under their assets is reserves. We have required reserve and excess reserve. We will see this later, okay? We will see what required reserve is, what excess reserve is. We will see the detail of each asset and liability component. Accountants, if there is any accountant, you can help me in understanding what asset and liability mean now. And go and read your introduction to accounting or principles of accounting. For, if you are not familiar with such terms as asset, liabilities, or something. Therefore, under the asset component is reserves, loans, securities, and other assets. And under the liability component is deposits. It might be checkable, or it might be fixed, or timely limited deposit and saving deposits. Discount loans, other borrowings, and the bank capital are classified under liabilities. The other is the national bank. I think in different countries, the name varies. In UK, you may find central bank. In US, Reserve Bank. In Ethiopia, you find the national bank, right? National bank. National bank balance sheet. All the commercial banks are managed under the national bank. Uh, the national bank have a balance sheet as well with assets and liabilities. Under the national banks, NB here stands for National Bank of Ethiopia. And under its balance sheet with asset classification is securities, discount loans, gold and SDR, special drawing rights, certificate accounts, coins, and reserve assets. Under the liability, central bank notes, outstanding reserves. You see the details, right? I hope it is visible. You see the cursor here. Deferred availability, cash items are under the liability of the national bank. Now let's see each component. Bank liabilities. How do the first question, if you remember, is how do banks raise funds? Banks raise funds, for instance, by issuing liability items, which are also referred as the source of funds. And the funds which are obtained from issuing liabilities enables banks to purchase income earning assets. Let's see how they raise funds with the consideration of some major bank liabilities or source of funds. One is deposits. You could know that you yourself is a source of fundraising for banks because you deposit in banks, right? Therefore, one of the liabilities that can enable to raise funds for banks is deposits. And deposits are the most important source of fund for banks. And deposits are various. The first deposit can be named as demand or checkable deposit. Here, you can understand from the terminology demand itself. And this demand or checkable deposits are bank accounts that allows the individual or the owner of the account to write checks for withdrawing at any time. You can deposit your money in banks and you can withdraw that money without any precaution. However, doing so has a limitation. If you put your money in banks under the demand or checkable deposit category, you will not receive interest because you are going to withdraw at any time without any precaution given to the bank. That is why we call them demand deposits. And these deposits are non-interest bearing. Non-interest bearing. Okay. Under the deposits, the other is saving deposit. These saving deposits are interest bearing. Uh, and these saving deposits might have some restrictions. For instance, if you want to withdraw much money, you might be expected to announce to the bank weeks, it depends on the rule, weeks or months or a week before. And these saving deposits can enable you to earn interest. And the restriction is not that much uh, strict, is not that much strong. You might, it depends on the rule and the legislation of respective banks. ቡክ ስታወጡ ከጀርባው ላይ የተጻፉ ነገሮች ይኖራሉ። እነሱን አንብቧቸው። ወዳድ ሳይ there are some rules that you could and rules and procedures that you could follow. The other is the time or fixed deposits. And this time this also shares some characteristics with the demand deposit. This time or fixed deposits have a fixed maturity length. They have a very defined maturity length, meaning that the time that will mature. maybe for women's or for a very defined 5 year, for instance. And for instance, if you put your money under the time or fixed deposit, and your agreement is to withdraw that money, or that money is to be matured, say, after 5 years. And if you change your idea and you want to withdraw early, you will be penalized. And the maturity date is usually determined by you, the saver, and the respective concerned bank. And the second source of fund in the liability classification for banks is discount loans. Now you could be familiar with these terms. For instance, you could know what discount loan mean, what saving deposit mean, what demand deposit mean. These are terms that you could know as well. Discount loans are loans commercial banks borrow from the national bank. And these discount loans, meaning this is a loan that commercial banks borrow from the national bank, right? When did they borrow from the national bank? They borrow when the commercial banks exhaust all possible sources of fund. And sometimes banks might face liquidity problem. At that time, it is possible to borrow from the national bank. Therefore, one of the possible source of fund is discount loan given to the commercial banks. And we have also under the bank liability other borrowings. It says that banks can also borrow from other banks across each other.
በትምህርት ከፍ ብሎ መብረር ይቻላል። ናሽናል አቪዬሽን ኮሌጅ የናሽናል ኤርዌይስ እህት ኩባንያ ከከፍተኛ ትምህርት አግባብነትና ጥራት ኤጀንሲ ሙሉ ዕውቅናን ባገኘንባቸው በማስተርስ ዲግሪ ኤምቢኤ በስትራቴጂክ ማኔጅመንት፣ ኤምቢኤ በባንኪንግ እና ፋይናንስ፣ ኤምቢኤ በቢዝነስ ሊደርሺፕ፣ ኤምቢኤ በሪስክና ኢንሹራንስ፣ ኤምኤስሲ በኢንተርናሽናል ትሬድ እና ኢኮኖሚክስ ዘርፎች በእውቀት ለመቅረጽ የበቁ ፕሮፌሰሮቻችን አረንጓዴ መብራታቸውን አብርተዋል። በነገራችን ላይ በኬንያ ሀገር ከሚገኙ ስመጥር ዩኒቨርሲቲዎች በሚመጡ ፕሮፌሰሮች የትኩረት መስክ ትምህርቶቹ መሰጠታቸው ልዩ ያደርገናል። በምርጥ የትምህርት ስርዓት የተገነባው ናሽናል አቪዬሽን ኮሌጅ በመጀመሪያ ዲግሪ በአቪዬሽን ማኔጅመንት፣ በሆቴል ማኔጅመንት፣ በአካውንቲንግ እና ፋይናንስ፣ በማርኬቲንግ ማኔጅመንት አስተማማኝ ትምህርት ይገቢውና ራስዎንና ሀገሮን ይለውጡ። አድራሻ 22 አደባባይ ወደ ሾላ በሚወስደው መንገድ ላይ ናሽናል አቪዬሽን ኮሌጅ የናሽናል ኤርዌይስ እህት ኩባንያ ህልሞን እውን ያደርጋል።
Or organizations or individuals. And the other is the bank capital. The bank capital, which is on the liability side of the balance sheet, is the bank's net worth. Bank's net worth here, equals the difference between total assets and liabilities. Therefore, the possibility of raising funds is by selling new equities or stocks that is retained from the earnings. And here, banks, if the asset of banks is short of that of the liabilities, we call them the bank is bankrupt. Bankrupt. Therefore, bank capital is very critical. And this bank capital is very important and used as a cushion against drop in the value of its assets. Its assets. In the previous slides, we have seen how the banks can raise funds under the liability category. Now, we are going to see the bank's asset that is falling in the financial statement of the balance sheet of the banks. And it is obvious that those commercial banks uses the funds that they acquired by issuing their liability. The liabilities are already discussed in the previous slides. And these liabilities are used for purchasing income earning assets. And these income earning assets might be, for instance, and these income earning assets can enable banks to make profits. Now let's see the bank's asset, for instance, the reserves. And these reserve here is to mean that is a cash or currency that is physically held by banks. And under this reserve, it might be obtained through their liability, for instance, by deposits, maybe by discount loans, or maybe other borrowings from other individuals or from other horizontal banks. And this will aggregately increase the bank's reserve. Therefore, the major source of the bank's reserve is the deposit received under their liability column. And the increment in the liability side of the bank results in increasing the cash reserve of that bank. The question is, what will be the purpose of this reserve? The banks use this reserve for different purposes. For instance, for purchasing income earning assets, for making loans, for liquidity purpose, for settling the minimum requirements settled by the national bank. Therefore, the point here is that they will not directly earn profits or make profits by simply holding reserves alone. What they did is they usually convert their reserve into assets that can bring them profit or income. For instance, they may give the reserve to loans. When they give loan, they will gain interest, right, from the borrower securities. Therefore, it is a conversion from reserve to the income earning assets. And the bank reserve is classified into two. One is required reserve, and the other is excess reserve. Therefore, reserve is the summation of the required and the excessive. What does required reserve mean? For instance, the National Bank of Ethiopia will order commercial banks, such as all commercial banks, no need to mention their name, to put a portion of their reserve in the national bank. We call this required reserve. From the total reserve of Secession Bank, a certain percentage of, or a certain proportion of the nation's reserve would have to be put in the national bank. We call it the required reserve. You may ask me, what is the purpose of doing that? It has a number of objectives. We will not talk it here. We will talk it when we see inflation. For instance, it has macroeconomic implication on loan, on inflation, for instance, or investment. Therefore, the decision of the National Bank is dependent upon a very professional decision. It depends upon science itself. Therefore, required reserve is all commercial banks are required by the National Bank to hold a certain proportion of their deposits they accepted in the account of the central bank or the national bank. Therefore, this required reserve is part of the total bank reserve. Though the commercial banks put it under the national bank, it is still a component of the reserve for commercial banks. And it is determined by law. It is determined by law. And the very important point is the commercial banks are not allowed to use this required reserve to make loans or for buying assets. Here, required reserve, እሱን ስሌት አስገብቶ ብድር መስጠት ሌላ ወደ አሴት ባይ ማድረግ አይቻልም. Therefore, commercial banks are not allowed to use their required reserve to make a loan. For instance, the National Bank of Ethiopia may have a law which forces commercial banks to hold, say, 10% of the deposits they received as a required reserve. And we have the required reserve ratio, which is temporary. If the banks are obliged to have 10% of their reserve as required reserve, therefore the required reserve ratio is referred as 10%. Therefore, this required reserve ratio which is the percentage that banks are defined by law to put in the national bank, that is required ratio A, the fraction or percentage which dictates the amount to be held as required ratio, required reserve after the deposits they received by banks. And part of the reserve which is held by the banks is reserved as excess reserve. ስለዚህ ናሽናል ባንክ ያላቸውን ግዴታ በሪኳየርድ ሪዘርቭ ፐርሰንቴጅ መሰረት ካስቀመጡ በኋላ ከዛ በኋላ የሚቀረው እነሱ ጋር የሚቀረው ገንዘብ excess reserve ይባላል። Therefore, excess reserve is part of the total bank's reserve, which is held by banks. And this excess reserve can be used for different purposes. For instance, when you go and withdraw from banks, it is paid for you from their excess reserve. When you receive loans, if you are an investor, it is given for you from their bank's excess reserve. And if banks as well buy other income earning assets, they made from their excess reserve. Therefore, so generally, this excess reserve is the part of the total cash is the leftover. After the deduction of the required reserve. Therefore, it is this excess reserve that the banks convert into different income earning assets, such as loans and securities. For instance, let's see an example. For instance, consider the Commercial Bank of Ethiopia. If the Commercial Bank of Ethiopia, for instance, receives a deposit amount of birr 2,000 from Mr. X, you can say, then if the National Bank legislation of the required reserve ratio is 10%, then it is possible to calculate the excess reserve and the required reserve of the National Bank. The total reserve is 2,000 birr, the original one, and the required reserve will be 2,000 times 10%, which is 200 birr, and the excess reserve is total reserve minus the required reserve. That is, total reserve is 2,000 birr minus the required reserve, which is 200 birr. Therefore, the excess reserve is 1,800 birr. Therefore, if Commercial Bank of Ethiopia wants to give loans, it is possible to do that with 1,800 birr. Therefore, Commercial Bank will use this 1,800 birr for buying income earning assets, for loan, and for buying other securities. Okay. Now, let's see how the multiple deposit creation is high. And hypothetically, we will start by assuming that there is no bank from the very beginning, with no bank. And if you remember, the M1 money supply is a summation of the currency and deposit, meaning M equals to C plus D. And from the first point, let's consider that there is no bank and an individual or has 1,000 birr. Therefore, the money supply is equal to C plus D, where C is the currency that has in his pocket, which is 1,000, and hasn't deposited because we assume that there is no bank. Therefore, deposit will be 0, and the total money supply will be 1,000. The main point that we are going to discuss here is the initial money has a multiplier effect on the money supply. And now we are talking with 3 scenarios. The first scenario we see is there is no bank. The second scenario is there is a bank, but that bank is 100% reserve bank, meaning it doesn't give a credit or loan for someone. It simply reserves. Therefore, the reserve bank, which we assume that initially we have a currency of 1,000 birr, is going to be deposited in the first bank that is thought to be 100% reserve banking. Therefore, in the first bank, when a specific household deposits the 1,000 dollar or birr, the balance sheet will be, the liability will be the deposit 1,000 birr, and the asset will be the reserve, which is reserved or which is reserved under the 100% reserve banking. Therefore, the money supply still is 1,000 birr. Now the currency is 0 because that specific household has deposited, and here deposit is 1,000. Therefore, the money supply is a summation of C plus D, which is equivalent with 1,000. Therefore, this bank has no effect on the money supply, which was originally 1,000, and still with the 100% reserve bank, the money supply is still 1,000. However, let's further consider our assumption by extending to the fractional reserve banks. And suppose the National Bank of Ethiopia sets a law to have R as 20%, meaning the required reserve ratio to be 20%. What will happen for the first bank, which is partially a reserve bank? Therefore, the liability is still 1,000, which the deposit is 1,000, and the asset is 1,000, right? However, we are assuming that this bank is partially reserving, meaning the national bank has a law which puts 20% of the reserve under its account. Therefore, now the case will be different. The liability of that bank will be 1,000. However, the asset will differ. Therefore, 1,000 times 20% is what? 400, right? Therefore, 200 will be in reserve. It will be reserved. And this first bank, this first fractional reserve bank, has the right to use the remaining excess reserve for loan. Therefore, this 800 birr will be used as loan for the first bank. Now, you see the money supply now is changed. Why? Because money supply equals to C plus D, and here the deposit is 1,000, and here you have currency C, because this 800 birr is given as a loan for someone else. Therefore, it is considered as cash here. And hence, the total money supply now is increased from 1,000 to 1,800. I think let me I will explain in American. አሁን ይሄ መጀመሪያ ባንክ ነው። ፓርሻሊ ፍራክሽናሊ ሪዘርቭ እንዲያደርግ ይጠበቃል። ስለዚህ 1,000 ብር ዲፖዚት ተደረገለት በሳም ኢንዲቪጁዋል ሃውስሆልድ። ይሄን 1,000 ብር ናሽናል ባንክ ለምሳሌ ወይም ባንኩ 20% ሪኳየርድ ሪዘርቭ ብሎ የሚያስገድደው ከሆነ 20%ን መንካት አይችልም፣ እንደ ሪዘርቭ ያስቀምጣታል። ስለዚህ 1,000 ሲባዛ በ20% 200 ይመጣል። ስለዚህ ይሄ ሪኳየርድ ሪዘርቭ ነው ማለት ነው። ከዛ በኋላ ያለውን 1,000 ሲቀነስ 200 800 ብር ይቀራል። ይሄንን 800 ኤክሰስ ሪዘርቭ ስለሆነ ምን ማድረግ ይችላል? ለግለሰቦች ብድር መስጠት ይችላል። ስለዚህ ከባንኩ ወጥቶ ለሳሙን ለግለሰብ ተሰጠ ማለት ነው። ስለዚህ ከሆነ ሰው ላይ ካሽ ሆኖ ተቀምጧል ማለት ነው 800። ስለዚህ 800 ካሽ ነው ማለት ነው። መኒ ሰፕላይ ደግሞ ሲ ፕላስ ዲ ነው ብለናል። ስለዚህ ዲፖዚቱ ደግሞ በሊያቢሊቲው 1,000 ሆኖ ተቀምጧል። ስለዚህ 1,000 ማለት ሲደመር ካሽ ሆኗል ደግሞ አሁን 800 ከሰዎች እጅ በብድር መልኩ ስለሄደ ማለት ነው። ስለዚህ መኒ ሰፕላዩ ወደ 1,800 አደገ ማለት ነው። Now let's further proceed to the other bank. Assume that this loan which is given for Mr. X, now Mr. X go to somewhere else and he, for instance, buy something from Mr. Y. Therefore, what will happen? Now, as the cash is transferred from Mr. X to Mr. Y, that is 800. And again, this 800 birr will be, maybe Y might go and deposit in his saving account. ስለዚህ ኤክስ ተበደረና የሆነ ነገር ገዛበት ሲገዛ ከዋይ ነው የገዛው። ዋይ ደግሞ 800 ብሩ ካሽ እጁ ይገባል እቃሽ ላይ ሸጠለት ኦር ሳምቲንግ። ስለዚህ ዋይ ደግሞ ይወስድና ከሌላ ባንክ ላይ 800 ብሩን ከሱ አካውንት ላይ ዲፖዚት ያደርጋል። Therefore, what will happen? Now in the second bank, since Mr. Y has gone and deposited, what will happen? The liability of that bank will be deposited as 800 and the asset will differ. Now, in the same fashion, the second bank is mandatorily expected to have 20% required reserve ratio. ስለዚህ ቀጣዩን ባንኩ የሀገሪቱ ህግ ተመሳሳይ ስለሆነ ከ800ውን 20% ማስቀመጥ አለበት። ስለዚህ 800 ሲባዛ በ20 160 ይመጣል ማለት ነው። ስለዚህ 160 ብሩ as required reserve ሆኖ ይቀመጣል ማለት ነው። Therefore the required reserve is 160 and the residual after the required reserve is the excess reserve which is amounted to 640. Therefore this second bank as well can use this money to lend or to make a loan for some other say Z ለሚባል ሰው ደግሞ ይሄ ሰከንድ ባንክ ሊያበድረው ይችላል 20% ሪዘርቭ አስቀርቶ and in the same fashion what will happen? Then that person again took that 640 birr for the other third bank and he deposits, and that third bank will again put 20% from his deposit, that is 640 times 20%. How much is it? It is 128. Therefore the national bank has obliged this bank to put as required reserve for the national bank. Therefore 640 ሲባዛ በ20% 128 ይመጣል። 128 ብር መንካትም ማበደርም አይችልም ያስቀምጣል። However 640 minus the required reserve, that is 128, which is equal to 512. This 512 birr can be used for loan. ስለዚህ ይሄ ሶስተኛው ባንክም ከ640 ብሩ 20%ን ያስቀምጥና ቀሪውን ብድር መስጠት ይችላል። Therefore again ከዚህ ከሶስተኛው ባንክ ብድር የወሰደው ሰውዬ እንደገና ሳሙኤል ሲዶ ሳም ኮሞዲቲ ይገዛል። ስለዚህ ኮሞዲቲውን ይወስዳል ተበዳሪው፣ ካሹን ለሌላ ግለሰብ ሰጥቶ ይሄዳል ማለት ነው። ያኛው የሸጠለት ግለሰብ ደግሞ ከሌላ ባንክ ወስዶ ብሩን የ512 ብር ወስዶ ሴቭ ያደርጋል ማለት ነው or deposit ያደርጋል። Therefore this is the procedure how the money supply is being influenced. Therefore you see the initial deposit was 1000. Initially we have a currency which amounts to 1000. However, through procedures the money supply has changed with multiple deposit creation process. Therefore what will be the total money supply now? ስለዚህ አጠቃላይ money supply ምን ይሆናል? Therefore what you do is you sum the original deposit, then the first bank lending, second, third, and in the same fashion it proceeds up to it gets to 0. Therefore the total money supply in our case or in our example can reach up to 5,000. What you do is you multiply 1 over RR, which is the required reserve ratio. Here the required reserve ratio የሚለው በህግ ነው የሚወሰነው። ናሽናል ባንኩ ነው የሚወሰነው። Therefore, here 1 over 0.2 times the original deposit can give you the total money supply, which is amounted to 5,000. Therefore, the original deposit can result in the effect of reaching the money supply up to 5,000. 5,000. Okay. Loans. Now, still we are talking on the asset component. The asset component, the other one is loans. And these banks raise their fund or their profit by issuing loans. And these loans are very important components of income earning assets for banks. And these loans are typically less liquid than other assets because loans cannot be recalled before their maturity. ለሶስት ዓመት ምናምን ብላ ያበደርከውን ብድር በሁለት ሳምንት ወይም በወር ውስጥ ወይም በሁለት ወር ውስጥ መልስልኝ ማለት አትችልም። Therefore, that is why we call loans as less liquid than other assets. And these loans has the possibility of increasing the profits. They have also a risk of default. It might not be repeat. I hope you have heard the history of Development Bank of Ethiopia, right? Where it has faced risk of default in billions, right? Therefore, loans does not always necessarily result in increasing the profits of the issuing financial institutions. As a result, because of this lack of liquidity and high default risk, banks usually put a high amount of interest on their loan. They consider the lack of converting to immediate liquidity, and they consider the high default or risk. It might not be business ሊከስርና ላይመለስ ይችላል ላይመለስላቸው ይችላል. As a result, these banks usually put a high cost for loans, which is high interest rate. And banks can also buy financial assets or securities. For instance, bonds. Bond አንዱ main component of income earning asset ነው. And these can be classified as government securities or other securities. And usually banks are the major buyers of government securities. the asset component, in the asset component of the banks is physical assets, buildings, computers, equipments. All these are physical capitals which are being owned by the bank and are included under the asset component of the balance sheet for banks. Okay, I get tired. If you have any question, you are welcome. I hope it is better to queue it here, because the next section starts with a completely new topic, and it is good to start it as a fresh in the coming week. Any question? If you have any question, you are welcome. Otherwise, we have completed our session today.
ልዩነት መፍጠር ዓላማችን ነው። ዓለም አቀፍ ተወዳዳሪ መሆን አለባችሁ። የናሽናል ኤርዌይስ እህት ኩባንያ ናሽናል አቪዬሽን ኮሌጅ ጥራትና ደረጃውን የጠበቀ ስልጠና በመስጠት ብቁ ዜጋ እያፈራን ነው። በፍላይት ኦፕሬሽን፣ በበረራ መስተንግዶ፣ በቲኬቲንግና ሪዘርቬሽን፣ በሆቴልና ቱሪዝም ሙያዎች አሰልጥነን ተወዳዳሪ እናደርጉታለን። ኮሌጃችን ካናዳ ከሚገኘው ኢንተርናሽናል ኤር ትራንስፖርት አሶሲዬሽን አያታና ከእንግሊዙ ICM ጋር በመተባበር ዓለም አቀፍ ዕውቅና ያለው ስልጠና እየሰጠ ይገኛል። በፍላይት ኦፕሬሽን፣ በበረራ መስተንግዶ የምንሰጣቸው ስልጠና ከኢትዮጵያ ሲቪል አቪዬሽን ባለስልጣን ሙሉ ዕውቅና አለው። አድራሻ ከጎላጉል ታወር 22 አደባባይ ወደ ሾላ በሚወስደው መንገድ ላይ የናሽናል ኤርዌይስ እህት ኩባንያ ናሽናል አቪዬሽን ኮሌጅ ህልሞን እውን ያደርጋል።